Hi everyone. Just a quick video tonight. I thought I'd make this one so that nobody jumps off a bridge with the price action that we saw this week. I put out a video several days ago discussing the term structure for gold futures on the COMEX and silver futures as well. I mentioned that the futures contract prices several months out are so low relative to spot that the owners of physical gold and silver could essentially mobilize their gold and silver for virtually no cost, and yet there was very little open interest. I said at the time that it implied that either interest rates available on currency loans were too low to incentivize the owners of the metal to seek out to loan it for interest, or alternatively, that there could be some doubts on the parts of the metal owners that if they do lend it out, it might not be returned. In other words, there might be some concern that the futures markets may fail to perform when it comes to gold and silver delivery. I said that we should be prepared to see interest rates increase and also see a further divergence between the paper contract price and the cost of obtaining real physical product. Today I'd like to show you the evidence that the divergence between the premium or between the spot price and the physical price is in fact taking place. Here's a screenshot of a random date gold eagle available on APMEX. Notice that the price of one eagle bought with a check or wire is $1,948.99. The spot price is $1,744. The difference is about 11.75%. This is about as high a premium as I've ever seen for gold eagles. Let's use the Internet Wayback Machine to see what the price was in the recent past. Here's a web capture of a random date gold eagle on February the 12th, only half a month ago. Notice that the spot price is $1,829.30, but the price of the physical eagle is $2,004.29. This is a premium of 9.57%. So the premium was more than a couple percent lower a couple of weeks ago than it is now. Let's go further back. And here's a web capture from November 12th, 2020. This is about 3.5 months ago. The premium back then was only 6.12%, almost half of what it is now. So over the course of less than 4 months, premiums on Gold Eagle coins have almost doubled, at least at APMEX. I'd say that's a pretty significant change. Now, I don't know if this will persist, but it does look like the market is pretty tight for Gold Eagle coins. I'm sure I'd see the same thing if I looked at other gold coins and also silver products. And this emphasizes something that I've said in the past. Someday, it might not be today or even this year, but someday, after a significant amount of time when gold and silver go into hiding, we will see a complete divergence between the price that we see, which is the spot price, and the price that we would have to pay for the real metal. Keep your eye on the ball, folks. The paper contract price can sometimes play tricks with the emotions, and it doesn't necessarily tell the whole story. Hopefully, I'll have more to say about this over the weekend.